how I identify the higher risk setup. Okay, so obviously guys, the market's moving in impulse correction, impulse, right? So if you don't know what I'm talking about, okay, let me just demonstrate. Correction and then impulse. Okay, same thing guys, on the opposite side we have an impulse, correction, then impulse. Okay, so the aim of the strategy guys is to enter after the correction has ended. You got it? The aim of the strategy is to enter after the correction is ended, guys. After the correction, after price completing the structure, guys. So we identify some structures, guys, so that it can guide us to like a higher probability setup. You got it? So guys, let's say, so yeah guys, let me just break down the higher risk entry. Okay, so let's say obviously we have a push going up, right? And then we maybe form a correction, guys, on the smaller, let's say guys we had a push, right? And then price form a smaller correction on the smaller time frame. Okay, and then after that impulse, and then fail to break that higher, guys, fail to break that higher. Obviously we know that the correction is starting, right? And then form our structure, guys, our 1, 2, 3 touch structure, guys. So this one, the reason why I say it's a higher risk entry, guys, because we have this this liquidity point. You can say it's a liquidity point, but Falcon traders will call it a hook point. Okay, so if price formed like a structure, guys, but also had a hook point and price didn't break that hook point, guys, we know this is like a risk entry, guys, because we have a hook point but price didn't break the hook point. So usually I use what we call a takeout level. So a takeout level, guys, it's a level within a structure. Okay, it's a second touch within the structure. Our second touch is this here, right? Our second touch is that level. So we're going to wait for price to close the 1 hour time frame or the 15 minutes time frame. So there's this thing that I teach my members. Okay, so if your PNL it's in the blue side, let's say you've made a profit, you are in a position to afford this kind of risk entries, guys, this kind of risk entries. So this is a risk entry, guys. This is not a risk entry but a higher risk setup. Yeah, this is the higher risk setup. And if your PNL is on the blue side, you can afford to take this kind of entries, guys. But if you are in a drawdown, I don't care if it's a pro firm account or your personal account, do not take this kind of entries, guys. I repeat, do not take this kind of setup if you are in a drawdown, guys. If you are in a drawdown, do not take this kind of setup, guys. Do not. Okay, so now let's go to the lower risk setup. Okay, so obvious, guys, the market's moving in impulse correction, impulse, right? And then let's say we had an impulse and then price form that correction, and then after that correction followed by an impulse, followed by impulse, and then after that impulse have a correction followed by a correction, and then after that correction, guys, we know Falcon traders, we are expecting an impulse, right? And then obviously, let's say guys we had a hook point. This is our hook point level, aka liquidity point. Okay, and then price approach that level in a corrective manner, guys, in a corrective manner. And then obviously, guys, we're going to wait for price to close above our hook point level, or also if price goes above our takeout level. So right here you have two options, guys, but if you're going to take it when price close above the takeout level, our stop loss, guys, we won't be too tight, guys. Okay, I ain't saying it's invalid, guys. It is valid, okay, but then the stop loss will be too wide, guys. Will be too wide compared to when you take it on the hook point level. Look at it. So, and yeah, obviously your stop loss level should be below the last candlestick, guys, below the last candlestick. Or if maybe you have another hook point maybe somewhere right here, your stop loss should be right below that particular hook point level. Okay, but if it's a 15 minutes, it's a 5 minutes time frame hook point or 15 minutes time frame hook point, it doesn't matter, guys, because those hook points on the smaller time frame, they do not hold like that much power. Okay, I can say power. Okay, and yeah, guys, this is how I identify a higher risk entry, higher risk setup, and a lower risk setup. Okay, so I'm just going to do a top-down analysis, guys, and before we go to the charts, I want to show you something. Okay, so guys, YouTube is telling me that 70.8% people are watching my videos, but but they do not subscribe, guys. I don't understand why, guys. But then please subscribe to the channel, guys. Please subscribe to the channel so that your channel could grow and the videos could spread throughout the world, guys. Okay, because right now YouTube is kind of limiting my videos because of the subscribers, guys, because of this, okay, because of this drop on the subscriber side. Okay, so only 29.2% people subscribe to my channel, but then 70.8 people didn't subscribe to the channel. So guys, please hit that subscribe button. You got nothing to lose, guys. You got nothing to lose. And also I'm breaking down, and also I'm like giving you all free knowledge, guys. Free knowledge. This is free knowledge. So please hit that subscribe button to help the channel grow. You got it. So yeah, guys, let's go to the charts. I want to do a top-down analysis breaking these two setups, guys, this higher risk setup and our lower risk setup. Okay, what I'm gonna do, I'm just going to like do a top-down analysis, guys, on two pairs. Okay, so it's only AUD 200 and also NZDUSD. Okay, so right now let's start with NZDUSD, guys. What I'm gonna do, I'm just going to do a naked price action, guys. So I'm just going to reanalyze. You got it. So guys, it's important, guys, to, like, when you do a top-down analysis, start on the weekly time frame, guys, because it tells you a story, guys. It tells you a big story. Okay, so on the weekly time frame, you can see that, okay, we have this hook point right here. Okay, and then also we have this hook point, guys. We have this inner inflection point, okay, on the weekly time frame. Okay, and then when you zoom in, guys, on the daily time frame, so on the daily, guys, you can see that we had what, our first impulsive push going to the downside, right? And then right here, guys, you can see that we have a clear correction, guys. Okay, we had this kind of correction, and also, mind you, we didn't break, guys, with this week. We didn't break the lower hook point level. Okay, we had this so we have this structure, guys. We have this structure, our continuation pattern, right? And mind you, we didn't break the hook point, guys, right there. You can see that price didn't break the lower hook point. Okay, and then we completed the structure, guys. We impulsed and then formed our first correction after impulsing this correction right here. Okay, and then after that, guys, we had a clear impulsive push, breaking our daily hook point, right? Okay, then right now we go to the 4-hour time frame because we are looking for us, guys. We are looking for our structures. Okay, our structures. So for structures, I use the 4-hour, the 1 hour, the 15 minutes, and also the 5 minutes for structures. Okay, so zooming in, guys, to the 4-hour time frame, you can see that we had our clear impulsive push right here. After that, impulse, right? Okay, and then right now, guys, you can tell that we are forming what, guys? We are forming our correction after our first impulsive push. Okay, so the only risk about this one, guys, is that we are not on the golden run. Okay, we are not in the golden run. So the golden run, I'm talking about corrections that form right here, guys, immediately after the impulse, guys. Okay, so this is our golden run, guys. We like to trade somewhere right there. Okay, but then the structure decided to form right here. Okay, this structure was supposed to be right here, but right now it formed on this level. And mind you, we have what, guys? We have our hook points right here. We have our hook points, and like we have too many inflection points, guys. We have too many inflection points. So this right here, guys, might form what? Might form an impulse, correction, and then impulse, right? There's a higher probability that price might do that. Okay, but the other thing that tells me that no, this won't commit, guys, you can see that we are forming what? A correction, guys. Our first correction. So our first correction is like a too important, guys. You must first. So I like to trade like the first correction, guys, the first correction after our first impulse. So this is our first impulse, and then right here, this is our first correction. Okay, and if price wanted to impulse, guys, price would
impulse, like give you a straight impulse, guys. As you can see right here, we had a straight impulsive push going up. You got it? So right here, price decided to form a correction. Okay, so zooming into the 1 hour time frame, guys, to identify a structure. I didn't want to take a risk entry right here, guys. Just waiting for an insurance entry on the 15. So guys, on the 1 hour time frame, first I want to identify hook points. Okay, so my first hook point is this level right here, which we break. Okay, and then the second hook point is this lower right here, and also we break that lower. But the only risky part about this one is that we break using a wick. So there's a difference, guys, between there's a difference between seeing price breaking like this and a break. So guys, there's a difference between price breaking a hook point like this or like this. Okay, so if price break the hook point with a wick, you must wait for price to fill that wick. Okay, so this right here, that's the only risk, guys, I have about this entry. Okay, but then another confirmation is that we've break this hook point. Okay, so why this area right here, guys? Why using this hook point instead of other hook points? So the reason why, guys, you can see that we had an impulsive push. Okay, so the volume must build right there. That's the reason why we impulsed and then made a break of structure. You got it? So that's why the hook point, guys, it's too powerful compared to this one. This one, you can see that, okay, we didn't even generate some volume, we just impulsed, but we didn't break that higher. If this impulse break that higher, if price maybe break that higher, we know like price might do something like this, guys, compared to retrace that hook point level. So that's the reason why, guys, we didn't impulse right here. You got it? That's the reason why we had this kind of correction, guys, towards the downside. Okay, so I hope that makes sense, guys. Yeah, hope that makes sense. Okay, so now let's get to the structure, guys. My structure was this 3-touch structure. You got it? But I didn't want to take a risk entry right there, guys. You got it? I didn't want to take a risk entry, not because I'm not in a position to afford these entries. You got it? The reason why I didn't take this entry, guys, is that price break the trend line in an impulsive manner, guys. So price break aggressively on the hook point, on the trend line. You got it? That's the reason why I didn't want to take a risk entry right there, guys. That's the reason why I didn't want to take a risk entry right there. Okay, so now let's go to the 5-minute time frame, guys. Okay, and see if maybe we have a correction or not. Okay, and then after this after breaking down this entry, after breaking down NZDUSD, we're going to go to AUD 200. Okay, so right here, guys, you can see that price is forming a correction towards a hook point, guys. Price is forming a correction towards a hook point, meaning it might have something like this, guys. We might have something like this, because remember, guys, this is our reversal pattern. This is our reversal pattern. I usually like to trade reversal pattern, guys. I got it? So we can see that we had an impulse and then we had a correction towards a hook point. But I don't like to trade reversal pattern, guys. I like to trade continuation pattern, and trust me, you will be profitable trading continuation pattern only. You got it? So right here, guys, what I'm waiting for something like this: impulse, correction, and then impulse. Why? Because we have this value area right here, guys. We have this value area right here. We have a hook point. Why this hook point, guys? You can see that that's the reason why we've break this higher level right here. You got it? That's the reason why I'm using this hook point level right there. Okay, so right now let's just get straight into AU 200. Okay, AU 200. So AU 200, guys, it's a risk in, it's a missed entry, guys. It's a missed entry, a long position, guys, but it's a missed entry. But I will demonstrate as in like I've taken that entry. You got it? So okay, Let me just go to the 15 minutes. So yeah, it's this buy position right there, guys. So what I'm gonna do, going to do a top down analysis, guys. The last top down analysis, naked price action, guys. Naked price action. So yeah, so guys, looking at AU 200, guys, okay, on the weekly time frame. So I don't like to to analyze too much, guys, on the weekly time frame, okay, but I just want to show this past price action on AU 200, okay. So first thing first, guys, you can see that we had our impulsive push, guys, our clear impulsive push, right? Okay, and then right now identify our structure, guys, which is our correction. You can see that like the system is repeatable, guys. The system is repeatable. So right here we collected volume, guys, on this area. You got it. We collected some volume on that area because we had a correction and then we had this volume, guys, breaking this higher level we had right here. Breaking that higher level we had right there. You can see that the system is repeatable, guys, okay. And then after that we had was a correction within a correction, a three-touch structure, which is this one, and then we had another impulse. We got it. We had another impulse, and right now price did what, guys? After impulsing, guys, you can see that we had this correction, guys. We had this correction, impulse, and then correction. Okay, so I don't like to do too many analysis, guys, on the weekly time frame. On the weekly time frame, I usually identify hook point. Okay, so my first hook point level is this level right here. Why this level, guys? Because obviously we created some volume, and that's the reason why we've breaked some other level. So that's the reason why I use that hook point level. Okay, right now we go straight to the daily. Okay, go straight to the daily and see the rejection, guys, on the hook point level. Okay, so as I've explained, guys, you can see that there's a difference between, just wanna repeat this, guys. So yeah, also include this, guys, on your trading plan. Trust me, it will help you a lot, guys. It will help you a lot. Our candlestick, right? There's a difference between this pattern, this candlestick, right, and this candlestick right here. As you can see, guys, also right here we break as you can see, the red candlestick, guys, break using a wick, right, and closed above the hook point level, and then the other one break the hook point with the body, not the wick but the body. That's the reason why we had this impulsive push, guys, this massive impulsive push. Okay, so right now let's go to the 4 hour. Okay, on the daily I only check I only confirm the rejection. As you can see, we had a rejection. Okay, so on the daily we had not a clear impulse, guys, not a clear impulse. To be honest, this is not a clear impulse. Okay, but then the other confirmation is that we had this smaller impulsive push, right? Smaller impulsive push, and then after that smaller impulsive push, price formed towards our first correction, our three-touch structure. You can see that, guys, this is like a repeatable system. It's a repeatable system, guys. It's a repeatable system, Falcon way. And then we had what? We had a hook point. Price did what? Price break, but with a wick. You got it. So I don't like to trade wicks. Obviously, I'm going to do, guys, what I'm going to do, so for scenarios like this, guys, I like to use the 5-minute time frame for that reduced risk entry, guys. You got it. But then I won't go through the 5-minute time frame and break down all the, you got it. I just want to make the video short, guys. And also right here we had a correction, a smaller correction on the inner time frame. Okay, so I also missed this one, guys. And then zooming out, actually we have this hook point right here, guys. Right? Why this hook point, guys? We had what? The volume was built right here. the volume was built right there. You got it? The volume was built right there. We had the impulse. That's the reason why. Okay, but then price decided to form a correction instead of an impulse. Okay, so price after breaking the hook point level, you can see that this is not a typical response for a sell volume, guys. Price must impulse, guys. You get it? Price must impulse. So this right here, you can see that this is a correction, guys. This is a clear correction. Even a beginner Falcon trader can tell that this is a correction. Why? Because we had an impulse and then price forming was our correction. You get it? So that's the reason why price didn't commit to our sell plan. You get it? So I was planning to sell right there, but I didn't sell. The reason for we had this kind of correction. Okay, and then zooming into the 1 hour, sorry, let's go straight to the 1 hour. I just want to show you the pattern, guys, the pattern identification. So right here, okay, this structure, right, 2-touch structure, actually a 3-touch structure. Okay, but then we didn't commit to break, and also we didn't break this hook point right here, which tells us that this is a risk entry, guys. If you are in a position whereby you are in a drawdown, do not take this kind of entries, guys, whereby you have a clear structure but you do not have actually, guys, we have a hook point right here. Yeah, we had a hook point, guys. We had a hook point right here but this hook point is not too powerful because it's a hook point on the 15-minute time frame or the 5-minute time frame. If I go to the 5-minute time frame right there, obviously you're going to see that correction, guys. Obviously you're going to see that correction on the 5-minute time frame. So I won't go to the inner time frames. Okay, and then right here, guys, right here we had 1, 2, 3 structure, which is our expanding channel. It's our expanding channel. Okay, expanding channel, upper 2 highs. Okay, and then zooming in, guys, let's go to the 5 minutes. Let's go straight to the 5 minutes, guys. Let's go straight to the 5 minutes. So on the 5-minute time frame, guys, you can see. So on the 5-minute time frame, guys, you can see that price gave us our first impulsive push, which is this impulsive push on the 5-minute time frame. And then after that impulsive push, price did what, guys? Price formed a correction. Simple, guys. A repeatable system, guys. A repeatable system. Okay, so yeah, this is what I'm going to wait for also on the NZDUSD plan, guys. You get it? So obviously, if I was available, guys, to see this one play out, obviously I will take it right there, and then stop loss level below this hook point right here. Why? Because obviously it's a risk setup, guys, because we completed the structure but we didn't break the hook point, right? Meaning it's a risk structure. You got it? If I was available. So obviously for management, guys, I usually use the 1 hour time frame. Okay, I only check the candlestick, okay, the rejection on the hook point, but then I will make a separate video, guys, on that one. And then today I take an entry on gold, guys, which was a great entry, but it ended up on break even. So today I was too busy, guys. I had a afternoon class at school, you got it? So this one, but then yeah, most of my team, guys, capitalized on this one heavily. So the structure was on the 5-minute time frame, a 2-touch structure. So let's just wait for price. Yeah, so this is my structure, guys. This was the structure on the 15-minute time frame, and we didn't use the market execution, but we use a sell order, guys, somewhere right there. Okay, and then our stop loss level was above this hook right here, so it almost took us out, guys. It almost took us out, guys, but then because of the gold spread, it's too tight, price kept us on trade, and then we had that impulsive push. So somewhere right there I was running at about 1k something. So I did send the screenshot, guys, on the other group. So be sure to join the group, guys. I will leave the link in the description. It's a free group where I send my weekly analysis with the team and discuss some ideas, guys, on what to create on my YouTube channel, guys. So yeah, better be sure to join us, guys. So what I'm gonna do, I'm just going to do a analysis, guys, but I won't do a naked price action, guys. I didn't want to make this video too long. I get it. So yeah, zooming. So yeah, guys, checking gold. You know, gold is crazy. Is on right there. Gold was on a new high, guys. Right there. Gold was creating a new high. Okay, but after that, we had guys, our first impulsive push. So this is what I call a correction within a correction, guys, whereby we had our first correction. Okay, but then this is not a clear impulse because we didn't break that low. This is not a clear impulse, but it is an impulse, but it's not a clear impulse. And then after that, guys, we had another correction. Okay, but the only risk about this correction is that price didn't break this hook point, right? Say this smaller hook point, but I'm not bothered about it because it's a 5 minutes hook point, you got it, and it doesn't hold that much volume, you got it. So my first entry, I took this late, guys, around 10. So it was on the 15-minute time frame, guys. 15-minute time frame. So on the 15-minute time frame, guys, you can see, guys, this is like it's a repeatable system, guys. Okay, so on the 15-minute time frame, okay, wait. So on the 15-minute time frame, guys, you can see we had what? Clear impulse. After that impulse, we had what? Pure correction. So this guys, this our system is like mechanically, guys, mechanically. So right here, I had a two-touch structure whereby it's 1, 2, and what I've liked about this one is that we didn't break aggressively. Okay, we just break and then we closed below. Simple. We didn't break and then come back to break. If price did something like this, obviously I was still going to wait for an insurance entry, something like that right there. Okay, but then we also had an insurance entry, guys. When I woke up at the morning, it was around 8 in the morning. Did send the analysis on the group, guys, on the VIP side. So I will plot a screen somewhere. I shot a screenshot somewhere on the screen, guys. So the pattern was this one, guys. A clear two-touch structure. So you can see that this is the opposite. No, it's not the opposite, but it's the same as this one. Just this one is different because it's a smaller correction, guys. It's a smaller correction, but it's the same correction on the same time frame. So right here you can see that I had my two-touch structure, which was 1, 2, okay, and then I took the entry somewhere right there with the sell limit. It came back and then it impulsed, okay, and it almost like took me out, guys, because it was going to complete something like this, guys. A three-touch structure, whereby we had a third touch, okay, and then after that impulse going down, you got it. So yeah, guys, this is the end of the video, guys. I didn't want to make this video like too long, but then if you didn't understand the strategy, guys, I advise you to check this video on your screen, guys, and be sure to like the video, be sure to subscribe, and yeah, guys, please be sure to subscribe because that helps me grow the channel also, and yeah, help you to learn more about the strategy. So for now, it's a Forex Mentor signing out.